G'day there. Welcome to the final closing bell for 2024. Many thanks for tuning in over the year. I hope I've been able to help you see that a bit of technical analysis can actually really help in understanding what markets are doing. And I hope I've given you a few tips here and there that you've been able to take advantage of, or at least that you're learning something about how to use the charts to help you manage risk, to know when it's time to attack, when it's time to chill out. And also a big welcome to some new people. We had quite a few new people last week check in and watch my video on the prediction on that Aussie dollar getting hammered and US dollar taking off, etc. And you know what a difference a week makes, that Aussie dollar getting smashed over the week. And I'll be discussing that today. I'll be following on from what the Fed's been doing, their sort of hawkish rate cut and all of the moves in the market as a result of that. I think we really spoke about that last week. I didn't know where all those big moves would come from, but now we know. And that's where technical analysis can really help you out, giving you a bit of a heads up before things really get moving. And look, if you are new, you may not know who I am. I know what it's like. You're flicking through YouTube, looking for maybe something on technical analysis or markets or whatever, and you come across some guy. You go, "Well, who the hell is this guy?" And I guess I'll just introduce myself so you can know. I work with a group called Fat Tail Investment Research. We're actually the largest financial newsletter publisher in Australia. So don't let my surroundings fool you. I just work from home, which is what I love doing. We've got an office in at South Melbourne. We've been around for decades doing this. We help people out with their investing in different areas, crypto, microcaps, more conservative investing. I actually run a service called Retirement Trader. And that's actually just using trading techniques, which I'll teach you in these videos to get into investments. So it's a more conservative, long-term view, but it's using the risk management process from trading techniques, including technical analysis, to help make the whole journey of investing much less stressful. And what I do, I'm really looking at mean reversion. You'll see in the charts, I'll be talking a lot about mean reversion and these points of control. And I'm really searching for those opportunities where I can capture a mean reversion move to take part profits and create a free call option. So that's a situation where you either break even or make money from that point. That's really what I'm trying to do, is find these good opportunities where we can quickly get to a point where you're either going to break even or make money. And then you're just planting those little seeds in the market as you go along. And you'll find that the volatility of your P&L over time goes down. And when the volatility of your P&L goes down, your stress levels go down too, and you perform better. And so that's really what I'm about and what I'm just showcasing you in these videos. And I can tell you, you're not going to read about any of this technical analysis in any book. This is from direct observation over many years. I started on the futures floor with Swiss Banking Corporation and Bankers Trust in Sydney. Many years on the futures floor, also trading for people, trading for high net worth individuals for years, broking to hedge funds, that sort of thing. So there's a long history there, and the things you learn in this closing bell video is actually unique and is stuff you're not going to find elsewhere. So if you pay attention and keep watching these videos, I assure you, there's lots you can learn. And you'll see below the video, there's something called the lessons, and that's just 6 key things that you need to know to trade markets effectively, to invest well over time. They're the main things I've really learnt over my time in the markets, and I put together a document for you for people who maybe are scratching their heads when they're watching these videos, to learn about what I do and to help them become better investors. So check that out. It's below the video there, the lessons. Have a read of that and you'll learn a lot if you're a new person checking these videos out. I hope you enjoy it. And today, let's get stuck into the charts after we've seen all of these big moves in the market over the last week. So let's kick off with this US dollar because I think, of course, it's the main game in town with Trump coming. This is a big thing happening in January, the Trump inauguration. US dollar has taken off like a rocket leading into this, and the Fed with their hawkish rate cut, saying that they're not going to be lowering rates as much next year. The market really adjusting to that. US bond yields going up, US 10-year bonds going up through 3.5%, and that US dollar flying higher, which is what I was discussing yesterday, last week, as a possibility. So let's have a look. I'll give you some targets on this US dollar of where I think it's heading in the short term. So to understand what's going on here, this is the long-term chart of the US dollar. And this is going back to 2000. So just notice that downtrend that was in place. And as I look at these sort of things, I'm looking at the corrections of the major waves in the downtrend. So that's why while it's trending down, I'm looking at this correction. And you can see I've got these areas within the range, which I call that buy and sell zone of the range. And to do that, you're just splitting that range in half to find that point of control, which is like that gravitational point that the market will oscillate around. And then you split that in half again and split it in half again. So it's 25%, 12.5%. And then you've got that area where I expect to see reversals within that range. So there's just a higher probability that you're going to see reversals in that area and then prices heading back to the point of control. So just to observe in the past how prices move. So where you can start to predict things and look for opportunities. So you can see that quite clearly there on that correction. And then we had the breakout and a new uptrend began years ago. And that's where you're then looking at the corrections from this point of view, that you've got these large waves to the upside, the corrections that occur, and you're analyzing those corrections and where the areas are where reversals occur. So this is a different methodology of looking at corrections that see prices go outside the range. This is a different type of thing that we can see. So you can see a good impulsive move higher and a correction. And then I'm looking at how these develop, where we have these false breaks of either edge of the range that you can see there. And again, there's areas outside the range where prices will often reverse and then head back towards the point of control, the midpoint of that range. This is all just showing you, teaching you how you can search for these opportunities in the market when prices are trending higher. I'm looking at these ranges, the points of control, and I'm saying, well, when prices break through the bottom of the range, there's lots of stop losses go off. People get taken out of positions. And when things turn back up, I'm expecting there to be a pretty quick move back to the midpoint. So this is where you're looking for opportunities to buy once prices return to the range. And often that can be the beginning of, the next leg higher. And this is the same in stocks, that sort of thing. This is where you can start to see opportunities. So just to look at where we're at now and considering this sort of thing is saying, right, well, we've just had a big rally from 2021 up through to 2023, let's say, late 22. And then we've seen a correction of that wave over 2023. And price action since then has really been based on that. So this is just to show you why I'm looking at these ranges. So as prices are trending higher, I'm looking at the corrections of those ranges. So I'm using this data here, this correction in the US dollar index from around 115 down to 100, and the point of control of that range coming in here. And now you can start to see the price action that we've seen since, where that US dollar has been stuck in a range and it's basically headed back to that midpoint, the point of control, and then has done a bit of work in the buy zone of that range, where you've seen uh, prices find support in the buy zone of that area. And then that US dollar is now breaking out above that point of control. So once it's breaking out above the point of control, I'm then saying, right, it's now probably got a target up towards the sell zone. And, then you might have a risk of it coming back to retest. So that's sort of the easy money, if you like. So I'd be saying now that we've broken out through 108, that US dollar index is probably heading up towards that sell zone area, which would be up around, is that 111 to 113, let's say, sort of around that area. So you're looking at this US dollar being quite strong, and there's not much resistance. It's broken out above a pretty key area. So I'd be expecting a bit of a trend towards that area. So that's going to obviously affect commodities, that sort of thing, gold prices coming off the boil, and that Aussie dollar, as I said last week, watch out. It looked like it was about to get hammered, and it certainly did. So let's jump to that Aussie dollar quickly. So last week, when I was chatting with you, Aussie dollar was up around, what was it, 63 and a half, 64 up here. And I was saying to you that there's some dominoes lined up here uh, with these major lows over the last year, year and a half, uh, leading to the fact that there'd be stop losses lined up below those levels. And the stop losses could then feed into the next set of stop losses, and which may ultimately feed into what will be the largest set of stop losses below this major low here, which is below sort of 62 cents, which is not far below where we are now. So I don't think the selling's over. As I said, the US dollar looking like it will continue to the upside. So I'd say at some point we're going to see even further flush out in this Aussie dollar. Now it's always very volatile and it can thrash around, do what it likes, but just be prepared to see the Aussie dollar really getting hammered. But if it gets down towards that sort of 60 cents, even 58, um, you can expect to see big recoveries from there. That's a major sort of support zone. And this is where I'm saying, we're looking at the way prices have moved. This is a major wave in a very long-term downtrend from like 82 cents down to the low 50s from 2018 to 2020. And again, note the recovery going to the sell zone area of that wave. That's where you get some fabulous opportunities within major waves, waiting for things to turn down. You've got the trend shift, long-term trend turns down. And what we've seen, just to analyze, what's been going on. So we got the rejection from the sell zone of that wave. Where did it go? Straight to the buy zone, the top of the buy zone there. And again, you often see the oscillation back towards the point of control. That's where everyone's unhappy. So it's basically been stuck at that point of control for the last few years, up around 68 cents, and the selling has been there. So it hasn't been able to really get above that point of control, which shows you how weak the currency really is. And then we've got the monthly sell pivot a few months ago. Prices heading back below the 20-month simple moving average, and now the 10-month exponential. That was a little false signal there saying that the trend may be turning up, and now that 10-month exponential going back below the 20-month simple. So that's pretty bearish. And you can see in the past, once that long-term downtrend turns down, And if it's hugging below the 10-month exponential, watch out. While it's in that phase, it can be quite weak. And so we are in quite a bearish phase. I've been saying, I said from 64.5 cents, middle of November, I said, watch out. And I gave a 3 to 6 month target on the Aussie dollar reaching possibly 60 cents. So it's really heading there. And we've got a few more dominoes to come, haven't we? If the Aussie dollar busts below that 62 cents, it could get a little bit frantic. Um, but then I'm not having too much of a big view because there is pretty major support down there. And maybe the story is middle of the year if China's getting hammered, tariffs, etc., etc. Maybe there will be some pretty serious downside, but that's not my call today. It's just to say prepare for more currency weakness. And just moving on to gold, a bit of a shifting sands moment, less interest rate cuts coming, inflation still bubbling along. It's not perfect conditions for gold, and gold is already has had a massive year, really has run hard, all trending higher beautifully. There's no need to sort of give up on gold until we see, long-term trend shift. There you see on the monthly, the 10-month exponential heading below the 20-month simple. And look, it stayed bullish all the way from 2002, all the way to when we got that correction in 2010, 2011. So, it's had a little scare a few years ago, but it's been in long-term uptrend. So all long-term very bullish still. But that doesn't mean it's not going to have a bit of a correction, which can last months, as we saw um, here a few years ago. So I think it's possibly getting ready for that based on what's going on, for a bit of a correction in gold as US dollar flies higher, and that could set off the monthly sell pivot in gold. So I've actually taken some profits on gold in the last week, remaining long, but have just hit the sell button on a few. Just wondering whether we're going to see a monthly sell pivot in gold this month, and that could just um, create a bit of a mean reversion event. How far it goes, who knows? Um, but big picture will still be looking fabulous. Just thought it was time with interest rate situation changing and currencies really moving. Trump coming in, we are in a bit of a time of flux. So I'd rather cash up a bit and just see what happens here and possibly buy back in at lower levels, load back up again. So moving on to the ASX. So the quick view on the ASX, I was saying to you last week, look, it's in an area where we could actually see a bit of selling pressure emerge, and I'll explain that for new people very quickly. But just wanting to note on my moving average, convergence, divergence, so the MACD, and that's really just looking at the moving averages. If you imagine a moving average as prices move, if you've got a 10-period moving average, I use the exponential moving average, and then you've got a simple moving average. So I use a 20-period simple moving average versus the 10-period exponential because it's more reactive and I find gives better signals. And if prices are really powering, obviously the distance between those two moving averages is going to be increasing. And then short-term momentum wanes. You're going to see that distance get smaller, aren't you? And so it's really just analysing that uh, distance between those shorter and longer term moving averages. And then that is what that blue line there is showing you. And then I've got a moving average of that blue line, which is the black line, the signal line. And that just gives you a sense of momentum in the market. This is just on the weekly basis. So looking at that ASX 200, and just to show you, in the past, when that blue line's above the black line. So if this is in sort of positive momentum, there you can see a very strong move in the market higher. And again, when it's looking positive, there you go, massive run. And then look at that, goes negative, and where we've got a big sell-off. Now, it's not one for one. It's not something that I just trade blindly, but it's a sense of, am I in a positive momentum period, or am I in a weekly negative momentum period? So there's weekly positive, nice rally. Weekly goes negative, quite a long time of selling off. Weekly goes positive. There's a nice big rally. Weekly goes negative. Markets get hammered. And again, weekly positive. You're getting the idea. And now it can be a case that, it doesn't just work like that. It can just be momentum slowing down. So you can have, weekly positive here. So a nice big strong rally. Then weekly negative here. Uh, Prices still go higher, but just slower. So it's sort of a sideways price action. That doesn't mean it's going to go down necessarily. It just means, well, it's not, there's not a lot of momentum to the market. Then it turns positive here, and you've got a nice big strong rally taking off again. So it's just a sign of, look, what is the state of the market in the short term? And based on that, if we're looking here, we've had a nice rally um, over this last period, especially for the last year. And we're just seeing that weekly has just turned negative recently. We got the weekly sell pivot last week, and then we've had the follow through based on the Fed coming out. So it's just saying that the short term is, you're not in a period of everything saying up, the positive weekly momentum saying, yeah, everything's looking great. So it's just in that period, there could be more downside to come. And the thing that sort of raises my confidence levels that we could see a bit more downside in the short term is, again, looking at these waves on this weekly. We've obviously got a big uptrend going on. We had a big correction a few years ago. And based on that, we've got a lot of evidence that price action has been respecting that range, where you can see the point of control of that range, midpoint there in this ASX 200, around 7,000 on the ASX 200. And then we had a lot of work done, didn't we? Going from the buy zone into the sell zone and back to the point of control, this oscillation that occurs. And then we've had a breakout. So the last year's rally has been this breakout above that range. And here is that level, where the key resistance level, that's 618, the Fibonacci level outside that range. So that's a calculation based on the size of the range. And that's where I was saying last week, look, it is actually in an area where you got to watch out. Everyone's bullish, but it still could be under the gravitational influence of that point of control down at 7,000. So even though, it may just be a short-term thing and then turn back up, which is all well and good. So moving on that weekly MACD, things may then turn back up like that, and it'll be a buy. And then all of a sudden, it's going to look great again. So it's not a statement that it's all over. It's just that the conditions right now have gone negative, and it's from a very sort of major resistance zone where you can see quite serious corrections from. And I did show you last week a lot of evidence over the past sort of decade of that actually taking place. So, for example, after the crash in '08, let's look at a few of these big corrections as we moved higher. And you can see there's your correction. There's your rally to the level 618, that blue line. And then there's your another correction from that area. And doing it again, I could even do that major correction there. So then we're looking at the size of that correction. We've then got the rally heading up to where? There's that level, 618, and there's your 2020 crash from that area. So it's one of those sort of things that not many people understand or look at. And there's plenty of evidence saying, when it's in that area, you've just got to be a little bit wary that things could turn down from there. So that's what it just increases my confidence that there could be a bit more downside to come as that US dollar takes off, China getting worried, commodities under pressure, Australian commodity exports expected to really tumble. So that Aussie dollar probably going to continue to the downside, and maybe there's some offshore selling in our market as a result of that. All right, I think that's enough for you to go on. If you're new, I hope you do stick around. Make sure you subscribe to the channel below in that video and on YouTube, and press like if you enjoyed and got something from it. I would like that too to get this in front of more people. All right, cheers. Have a great Christmas, and I shall come back with more in the new year. Cheers.